Airlines under pressure today, led by Delta. Our Phil Lebeau spoke with the CEO this morning. He's with us. It's nice to see you for a change with us here on the set. What's been a pretty lousy year for the airlines, ex-United.
And the biggest concern, and you're seeing it today with the airline stocks all moving lower, is that when you look at the guidance from Delta, it's not bad. It's not like they're warning. It's just not as robust as many people were expecting from the or from the airline industry. And as a result, people are saying, do we come out of the fourth quarter, which is typically when you see the airline stocks rally, and do we go into the first quarter and it's okay? It's the slowest time of the year for the airline industry. And are we expecting that they're truly going to be able to do what they are forecasting for all of 2019? So I just think that there's just no belief in these guys right now. And that's not to say that Ed Bastian, when we talked with him this morning, he said, look, we're expecting double-digit earnings growth. We're going to be growing our margins again, not by a lot, but they do expect to expand their margins.
Oil's down.
Oil is down. There's just not the confidence there in this industry.
With that? I mean, you guys own these stocks.
Yeah, no, I sold them. I mean, this is one area where I haven't lost money. I've actually done well, and I traded Delta recently, traded United. Here's the issue. I just don't. It was always tough getting others over the hump. Buffett famously got over the hump when he brought in two new guys, but they've just not been great stewards of capital over the years. Now, this was going to be different. They're virtually monopolies or duopolies in each of their major markets. But when they started announcing capacity increases, everybody said, here we go again. So United came out and said 4 to 6%. Then, then Delta came out and they talked about capacity increases. Everybody follows. So when oil goes down way low, they put on more capacity because it's cheaper to fly. So you don't have the benefit, really, of low oil. When oil goes up too high, they're not hedged.
But here's the counter argument to that. Delta said they're going to increase capacity 3%. And I know we heard from Oscar Munoz yesterday. He said 4 to 6% capacity increase. That's been forecasted by them for some time. Most of that capacity, by the way, is coming into the system. Now, United's is domestic, but for Delta, it's a lot of international routes, and that's where the demand is strong there. So the counter argument is these guys aren't going wild. It's not like they're out there saying, well, you want to fly to Poughkeepsie? Let's add a flight to Poughkeepsie. That's not what's going on here. They're being very judicious, and yet there's just not any confidence. I think people are worried that they're going to fall back into their bad habits.
Right. Well, Phil, I got a question for you. So we look at all these names all the time, right? But there's really the big three. And we talk about Southwest, we talk about JetBlue, and some of these Hawaiian and all the rest of them. What is wrong with American, and why has that been? Is there a storyline that somehow we're all missing on why it's underperformed so much relative to the
margins are being pressured. They are being pressured on the margins. Segmentation of their cabins has been slower than their competitors, and as a result, they just haven't been able to get the margin growth that we've seen from Delta.
So it's efficiencies.
It's efficiency. Yeah. But Doug Parker is confident that they are going to have the pieces in place in terms of how they have their network set up over the next year to 2 years to 3 years, that they should be able to gain ground on their competitors in terms of that gap in profit margins.
We began the show by talking about synchronized global growth. How much of a problem is it that Europe is contracting internationally? The economies are contracting. Are the airlines internationally able to pass through some of the fee increases that they were able to survive?
They're able to do that. On the transatlantic routes, they're able to do that. And the concern was you have these low-cost competitors coming in, whether it's Norwegian or Iceland Air or others, and that they're going to pick off markets here and there. There's been a little bit of that, but for the most part, when you talk with the airlines, they are able to pass along the fee increases as well as the pricing on the transatlantic flights. So it's not caving in at this point.
Jimmy, you own Alaska in terms of your exposure to these guys.
Yeah.
And why that one over the big three that Pete said, or some of the others?
Yeah. Well, it's different. And, as I think we all know, it's gone through this merger with Virgin America that's transformed it from really a regional carrier along the West Coast to a transcontinental carrier. Now, that's got a plus and a minus, right? That means it's not exposed to international routes, and that could be a plus or a minus. But basically, and Phil, I think you'll agree with this, for many years it's been regarded as the best airline by its customers, newest planes.
Brad Tilden and his team do a phenomenal job. They are phenomenal at execution.
And so that's the big question, is whether they execute through this merger and keep the culture and the performance and the execution from the old Alaska Airlines and just grow the business. So far, it looks like it has. But you do worry if, number one, the lack of international is going to hurt them.
Right.
And for every airline, if we're talking about slower growth, and this is to your point, Steve, you get visions in your mind of airplanes parked out in the Mojave Desert. It's still there, even though for 10 years we've supposedly transformed the industry with segmentation of fees and not having empty seats on either side of you. That fear is still there.
A couple of things to keep in mind. Take a look at Spirit, look at Save, and look at the run that it's had. They came out with new guidance after they looked at the fourth quarter numbers, blew away what everybody was expecting. People are paying these fees. They are paying for the segmentation within the plane. So I know that concern is out there that the public is not going to fly, that we're going to see a real drop in revenue, but the industry's just not seeing it at this point.
It's very interesting, and I think this is part of it, is that it's been so good, the baggage fees.
Right.
If you're 2 pounds over, $100 for doing this. Front of the plane, you can't get in there unless you pay for it. And the prices we talked about this a few months ago, are ridiculous. $10,000 to fly to Europe in the front of the plane. But the back of the plane is $140. So with things have gotten as good as they can, with all the upcharges, with blacking out all the free upgrades and everything, yet they still can't consistently report good earnings without surprising the street to the downside. And that's why it's done. So that's why the stocks can't get out of their own way. So they're trading stocks based upon the quarter.
Right.
And as long as you look at them as trading stocks, I think you can do okay.
Well, and it's possible that, as airlines, as part of the industrial sector, they've kind of been thrown out with the bathwater here and concerns about trade, concerns about maybe overly concerned about slowing growth. The consumer is healthy. We have a lot of indications that wage growth is going up. The consumer confidence might be a little off of the highs of the cycle, but still very elevated. That bodes well for the airlines.
And think about this. We talked with Ed Bastian about this. Corporate travel, it is not slowing down. That's the first place where you see the crack. That's where the companies say, hey, you know what? You're not going to St. Louis this weekend or on Monday. Stay here. They are not seeing that. And that yet whenever you bring this up to people, they go, yeah, but I'm not confident it's going to continue.
Right.